Good. We are live. Somebody let me know in the chat everything is coming through loud and clear. Go ahead and get this stream started. Sorry for the little delay there. Welcome back to the channel, Crypto Trend Trader, with our Friday morning market update. It is September 30th, 2022 at 11 a.m. Before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, everything looking good. Let's go ahead and jump right in. So obviously we have quite a bit going on. Today is the big day, the most important day of the last 90 days, arguably. Today is the end of the day, close, the end of the week, close, the end of the month, close, the end of the quarter, close. We have quite a bit of closes lined up right here. So, that's what we're going to pay attention to. We talked about the major indices, cryptos, etc. Talked about the key areas that we need to be watching. Oftentimes price action will move towards those areas. That is what we're seeing on Bitcoin and crypto. Conversely, something like the stock market is literally just floundering at the lows. So let's take a look and see what this all means for us. So TNX obviously had a little push down over the last couple days. Now it's just hanging out at the 8. If it continues to push to the downside, we would expect a target down here around the 21, around 354. We got a couple red histograms. We got a hard sell signal. We're still inside the bullish control zone for now. But it is definitely looking a little tired on the short term. Now, as far as trend ending, this doesn't really change anything for me here. My bad, had to take care of something. So yeah, TNX on the monthly, when we look at this, still very, very strong. There's pretty much nothing that can happen on the TNX monthly chart that's going to change this candle. It's still extremely bullish. The trend is still extremely strong. So literally nothing can really happen on this chart. We would have to push down below like 2.75 to change anything for the negative. So I just don't think that's probable right now. TLT, it's not really much to see on this. It's obviously just, essentially inverse. A little longer duration. This is a 20-year bond instead of the 10-year yield. But we see here very clearly, there's a decent amount of stuff on this chart, but we can see there's some very important things. We broke down from the descending channel. We broke down from the head and shoulders. We're basically hitting the measure moves, and we're also hitting that previous low from 2013. So quite a bit of support at this level. The question is this the type of support that is going to be the bottom for the bond market? Or is this just a dead cat bounce off of a key support level from, 9 years ago? Time will tell. This is really disgusting. This monthly candle is just absolutely terrible. And just to me, looks like continuation. We just broke below the 200 exponential on simple key support levels. Obviously we have some more support right here, but it seems likely we're coming down to this key fib level at the 786 around 95.79. Obviously my target was 101. We hit my target. So I'll put up another target to the downside, but the truth is, we're hitting target after target after target. So while I don't want to get overly bearish, having a target to the upside right now seems a little unrealistic. I think a back test of the 618 would probably be that target. So maybe as high as 109, 110. And now downside wise, maybe 96. All right. And then Let's just jump over to US oil here. So here for US oil, obviously we put in consistently lower highs and lower lows. And now here we are basically hanging out at the lows. We talked about this situation here where this new low was basically a push down to a new low. And then the move back up was basically just a back test of the previous level. And if you look at right here, this recent price action, it looks like we basically back tested and got rejected. You know, we talked about reclaiming this level, this cluster of support right here, and we push back up to it, and it's basically acting as resistance. Now, we already basically, I mean, we already hit our targets in so many things, but it's important to still have targets both to the downside for continuation and also to the upside. So we hit our downside target. You know, we're basically hitting the upside target for resistance, and then it seems likely we come down slightly lower, possibly down here to like that 66.37 level. If we flip over to the monthly on oil and just take a look at what it has to show. You know, we put in the hard sell. We left the bullish control zone. Stokes are powerfully angled to the downside. Multiple red histograms in a row. We do still have a blue slope line. We are still above the zero. We have 4 months in a row of pretty methodical selling. About equal size candles. Slight rejections to the upside, slight rejections to the downside, but basically just a methodical march down of continuation. Back to retest the 200 simple at about 72.45, or potentially the 200 exponential on the monthly at about 63. This does look short-term toppy right now. When I say short-term toppy, I mean on the monthly time frame. It's looked like it's topping. Obviously, we called the top perfectly at 114 in advance. We're able to take profits on the majority of those positions. And now they have just consistently melted down. So the real question is, are we going to be entering again this quarter for the end of the year? Are we going to be entering at the beginning of, Q1 2023? Is it going to take longer than that? Is it going to be somewhere in between there? We don't know right now. We know that obviously oil, energy in general, long term still very bullish on, uranium included. But right now, we're not seeing signs of bottoming. We are approaching some key support levels, but it looks like there's still more pain or continuation. Now, if we do start to see a short-term reversal on, a 4-hour or daily chart or something like that, we can potentially look at momentum and start to build positions based on that. But for right now, it looks like it's just in the middle of a correction. And then, eventually we'll have an idea which way the price moves after that. But right now, it's clearly just a correction. We're clearly entering into a bear market. We're about to flip the 200 simple red. So for right now, energy is on the naughty list. It doesn't look like total shit right now, but it's not looking good, and it's looking worse by the day. So let's talk about, speaking of the naughty list, let's talk about our major indices and what's going on there. And we'll talk about crypto too. Obviously Bitcoin got that push up to the 4-hour 200s like we discussed, retesting that same 20,000 level. This doesn't change anything. It's the exact move we discussed. It's basically just a back test, the attempt of the bulls, if there are any still alive. I'm not sure if there's actually any bulls left or if there's just people that are like completely trapped upside down, sticking to their guns like Michael Saylor, but they don't even believe their own bullshit anymore, or if it's literally just people that are still distributing on the, plebs' faces. So they're just holding up the price so they continue to dump on them. And, eventually we'll get a markdown to the next level. I mean, I don't know. We'll have to wait and see. We'll see how the close goes. But it's good to see there's any life left in crypto at this point in time. I mean, is it just another lower high? Is it just another backtest rejection? Sure, maybe, but at least on the monthly, maybe we don't close a monthly red candle. So we'll see. We'll get to crypto here in a minute, but I know people get excited when we see like any kind of movements in real time. So Dow Industrial on the daily, still just hanging out at the lows. I mean, this is the worst possible price action you could get, just hanging out at a low. It's just a matter of time before that low breaks, typically. Now, you could get a situation like this where we hang out at the high and then we reverse. It's always possible. We're in the bearish control zone still. The knife is starting to stick up here a little bit, at least green and positive. But we still haven't exited yet. We still haven't got the buy signal yet. Last time we got the buy signal, it was basically the exact top. So it was essentially just a failed rally fake out. All red histograms, splashing in a couple green ones right here. There's nothing really on the daily. I mean, your biggest argument on the daily chart right now to be bullish on the stock market is, oh, well, everybody else is bearish. That's the argument. Like, I'm a contrarian. Oh, okay. Great. Sure you are. You've been buying the whole way down and now you're still buying, so you're a contrarian? Huh, okay. That makes sense. Nobody else has been doing that at all. We look at this monthly chart. I mean, does this look like a strong monthly close to anyone? We have a new low. We got 4 hours and 44 minutes. You know, maybe we can rally back up like Bitcoin did. We can hit 306 on the Dow Jones, Dow Industrial. I mean, that's at this point in time, that's like a 3% rally. It's pretty much unheard of in the Dow Jones in a single day. I mean, is it possible? Sure, it's definitely possible, but I wouldn't count on it at this point in time. And all that looks like to me is just a new lower low close on a monthly time frame. Just absolutely disgusting. Absolutely disgusting. So, I mean, I don't see anything bullish here. We do have a slightly lower low on the monthly at 286, which was the 2020 highs. So it's possible, you know, that we find some support around there. There's not really much right exactly where we're at now. But the truth is, the most important thing we can see when we look at this chart is all red histograms, red slope line, all the momentum on the TDMACD is to the downside. Hard sell, left the bullish control zone. Stokes are powerfully angled to the downside. You know, again, very, very strong trend moving to the downside. And then, of course, when we look at the actual moving averages, the 8 and 21 have just had the bear cross. Man, is YouTube having difficulties again? All right, it looks like it's okay. We just got the bear cross. We have a new low, candle-wise. This just all tells me expect continuation to the downside. Now, after closing a really bearish quarter, after closing a really bearish monthly candle, is it possible we push back up and backtest some of these levels, you know, move back up to like 307 or move all the way back up to like 319? It's definitely possible. But at this point in time, typically when the actual cross occurs, we see capitulation shortly afterwards because a lot of bots and algos, obviously, you guys know, are using the same techniques, methods, and numbers for moving averages, etc. that we do. And, you know, obviously that's a lot of the reason why we use them. Trying to do what the intelligent investors are doing, not based on, you know, what they tell us they're doing, but what they're actually doing and what the momentum is telling us. And we know when the momentum flips bearish, a lot of times we get the bloody waterfall right afterwards. The momentum flips bearish, bloody waterfall. Momentum flips bearish here, bloody waterfall, or the initial one, you know. And now here we are at that same area here when the momentum flipped bullish, bloody waterfall. The Fed saved the day. Fiscal and monetary policies saved the day. So as we're about to, what looks like, enter into the bloody waterfall or the capitulation, or when the markets flip from buying the dip to selling the rip based on longer term trends, you know, when that happens, we would expect essentially, you know, what I coined, what I created, the old bloody waterfall. But here we are on the weekly Dow, and this is what's going to trigger the bots and the algos. Closing below the 200 simple. Big deal. We talked about coming down here and just testing the 200 simple. Instead, we came down below the 200 simple. We closed below it, back tested it, and then we put in a new low since then. So obviously what happens on the daily, what happens on the weekly, what happens on the monthly is going to really matter. But right now we're about 5 hours away from just really, really ugly closes. The weekly close needs to at least not be red. The monthly close, there's pretty much nothing we can do at this point in time. And the daily close doesn't really matter, honestly. So at this point in time, the weekly close is basically, sure, we could see a little sign of life, but the monthly close is pretty much locked in at this point in time, unless we see just a face ripper rally for 4 hours and 40 minutes going into the monthly and quarterly close. I wouldn't get excited on this one. And again, we're just back testing key support for now. I don't expect to just drop through this and just go straight to zero. We could definitely chop around here. But when the 200 exponential flips red, when we're below the 200 simple and it flips red, that will literally be the bots and algos saying, okay, we are no longer buying dips on a weekly time frame. We are now selling rips. So that's been happening on the daily. So obviously, when we look at the weekly, the 821 crossed down at 352. So if we go back over to the daily and say, okay, when did they flip back here? Well, once we were below the 200 exponential and simple and they flipped about 345 is when they flip bearish and they get a back test. We put in a new low, we get a back test, another lower high, and a failure to break above those key moving averages. And again, right around like 352, this is when the confirm on the daily, which leads to our weekly 821 cross. And now we're about to confirm on the weekly. So we see what the price action has looked like after we confirm bearish on the daily. It's been straight down, followed by a nice little face ripper back up to a lower high, and then straight down again. So in my opinion, if the weekly is about to flip over in the same way, we're likely about to get another one of those big legs down. And then obviously, maybe we can get a back test, et cetera, et cetera. So, man, hopefully YouTube is not just forever struggling. I hope everything's coming through good for you guys. We're like in the middle of a hurricane right now, where I'm at. So things are a little bit crazy. Obviously, YouTube can be a little bit finicky at times. My internet says everything is fine, but YouTube is telling me that I'm having connection issues. So, okay, great. I appreciate that, Greg. Thank you, guys. I appreciate that. Yeah, I'm not sure what exactly is going on. YouTube's been a little bit weird lately. Must be because their stock's down. They're cutting back a little bit on their services. But we're like literally in the middle of a roaring hurricane. So, well, I shouldn't say in the middle. We're like just outside the eye. So we're right at the exciting part. So anyway, Dow Jones, for me, I don't see anything positive on this chart. I don't see anything to get exciting about. And it looks like just more continuation. To tell you the truth, all the major indices look the same. The daily SPY is exactly the same. When we come over here and we look at the weekly, again, it's slightly stronger. It is still above the 200 simple. But what did we do? We came down exactly and touched the 200 simple. Exactly what I said. Put in a slightly lower low. Hit our target exactly. So now what happens after that? Well, once we hit a target, of course we gloat a little bit because, our target got hit. And then after that, we decide, okay, what's our next target if we all of a sudden flip bullish or if we see continuation, bearish. So, obviously a bullish target would be our next moving average to the upside or key Fibonacci level. A bearish target would be our next key level of support, maybe the 2020 highs, 337, etc. So right now, when I look at this, the weekly is rolling back over, all red histograms, moving averages, all just rolling over. We have the 200s holding us up for now, so it's at least a start. But honestly, this just doesn't look good to me. None of this looks good to me. And then the SPY on the monthly, we are basically, we're not even basically, we're confirming, everything we discussed about in advance. So, it's all just happening right now. No big surprises. We basically are putting in a new low. We're getting ready to close a daily, a weekly, a monthly, new low. Everything powerfully angled to the downside. We're confirming the 821 bear cross. We have a hard sell. We've left the bullish control zone. Stoch still powerfully angled to the downside. All red histograms, red slope line. Just no signs of letting up right here. Now, the truth is, though, we break down from this level. The market may see this as a buying opportunity, once again, to buy new lows. The market may also see this as an opportunity to just dump their positions because we're going much lower. The problem is we don't know which one, but we do know that the risk is all to the downside right now. There's very, very little risk to the upside because we'll see it happening in real time. We'll see all the little steps being taken to reverse the trend, and that's just not what we're seeing right now. We're seeing the opposite. We're seeing the trend continue to strengthen to the downside. And at the same time, we're seeing more and more people, talking about buying the dip, buying the lows. You're crazy not to be buying at these levels. Long term, buy and hold, hodl. The market has never went sideways. No one's ever bought, and not made profits after a 10-year, or 12-year, or 15-year, whatever statistic makes the market sound better than they are. So next, if we look at the Qs, we have new lows on the Qs. We're hanging out at those new lows. You could say, oh, we're exhausted. We've been selling off. We're too low. We can't go any lower, bro. Sure, maybe we are exhausted, but oftentimes those capitulation moves happen when the indicators are all the way at the bottom of the range and you think we just can't go any lower, and then we drop 20% in a single candle. So triple Qs on the weekly. Again, we're threatening the 200 exponential and simple. We talked about this exact scenario where we basically expected to come down to the 200 simples. We front ran it at the 200 exponentials. We had that beautiful bounce. We capitalized on that bounce. And now here we are. We did exactly what we said. We round tripped the entire move and we put in new lows. We dispelled the rumor that has never happened before and made everybody that argued that rumor or talked about it or whatever, look like a brain dead retard bitch. So that being said, that's always good, obviously, when you can dispel the entire internet in about 5 minutes. But that being said, I mean, we put in new lows. We did the thing people said was impossible, even though we've done it a bunch of other times. And it just seems like we're going to keep doing the same thing. So do we put in new lows right away? Do we get a bounce from here first and another lower high? And then, the floor falls out? We don't know that. But what we do know is everything's pointing to the downside. 821 bear cross, hard sell. All these look the same. They look exactly the same. It's just a matter of when they fall, how far do they go? That's really what it comes down to. That is really what it comes down to. So then we look at IWM, the Russell. So Russell, again, threatening the lows down here, didn't technically put in a new low. So I guess, that's good for the Russell. Congratulations, Russell, on just hanging out within like pennies of your low and not actually taking it out. I guess that's good. Weekly, again, slightly off the lows, below the 200 exponential, below the 200 simple, flat to bearish slope, 821 bear cross, all red histograms getting ready to pass below the slope line once again, hard sell signal. I mean, again, just everything on the weekly and monthly time frames is just super bearish. When we look at the monthly, we're in the bearish control zone. The bears are in control right now, and they're so in control, they actually have not been this strong in the market since 2009. And you're like, yeah, but 2009 was the bottom. Sure, we also had a capitulation move that got us to that level. Here, we haven't done much of anything, and we're at that level. So, does that mean the bears are about to lose control and the bulls are getting ready to step in? I wouldn't look at it that way. I know a lot of people say, oh, we're in the bearish control zone, so now's the time to buy. I don't see it that way. When the bears are in control, I have no interest in buying into a stock or a market. It's when they lose control. When they're in control and then they lose it again. It means the bears were completely dominating and then something happened. Something happened back here. The bears were just completely smashing the market, just completely dominating everyone. And then here they started to lose control. We left the bearish control zone. The bears were no longer in control. We get the hard buy signal telling us we want to enter, and then we get the monthly 821 bull cross. So if you're trading this on a daily or weekly chart, it's going to have you in here, it's going to have you in here, and then the monthly is going to have you in, roughly around this area here. So you just keep adding to our position along the way. Obviously, none of this financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. But we don't buy while the bears are in control. Now, would that have been a great buying opportunity when you entered the bearish control zone? Sure, this one time it would have. But the problem is, and again, you don't see this often on traditional markets, but the problem is when you enter into the bearish control zone like this, and then you sit in it, and then you come out, and then you roll back over, and then you enter into it again, and you're much lower now, and then you do the same thing, and then you enter it in again, and you're much lower now, and it just keeps happening and keeps happening. So we want to see the bears not only just in control, we want to see the bears lose control, and then we want to see the momentum start to build in favor of the bulls. And we're just not seeing anything even close to that right now. Matter of fact, as long as we're consistently putting in lower highs and lower lows, there's no reason to even look for a market bottom or consider a market bottom. That's the first sign, is lower highs and lower lows. Or maybe exhaustion, some bullish divergence would be a start. We're just not seeing that right now. We're just consistently seeing markets melt down. SMH at the lows, back testing it. It looks terrible on longer time frames. XLE. XLE, again, broke down below the 200 exponential and simple, back testing it as resistance now. Is this the beginning of what's going to amount to the confirmation of the entry of a bear market? Or are we going to reclaim these levels? I mean, I don't know. You could argue here, we came down to the bearish control zone. We left it. We had a nice move up here. Came down to the bearish control zone. We're potentially getting ready to leave it. Have another nice move up here. Just going to be another in a series of lower highs. Probably. I would look for essentially, something along the lines of, some kind of move back up here to retest that resistance. Something along this line doesn't seem too insane. A move back up to maybe 78.54. Enough of a decent move to get people excited, and then just rolls over and comes back down. Now, we did put in a higher low right here, so it's a start. We don't know if this is a swing yet or if it's just going to go lower, but we'll pay attention to that, obviously, and see how this develops. But the truth is, again, when we zoom out and we look at these longer time frames, these charts don't necessarily look bad for like long time frames, like years into the future. But when we start looking at monthly and we see, energy has basically put in a hard sell signal and left the bullish control zone. So, the bulls were in massive control. Energy was going absolutely parabolic. And now the bulls are no longer in control. We've got a hard sell signal. We've left the bullish control zone. So now the bears are taking back over. So it doesn't mean the bears are going to win the trend and we're going to go to new lows. But it does mean right now the bears have the ball. So are the bears going to take the ball down to 66? Are they going to take it down to 57? It's going to be somewhere in between there. Obviously we don't know right now, but we do know that the previous times when the bears had the ball, here we saw the hard sell signal, but we didn't exit the bear bullish control zone until way up here. Here we see hard sell, exit the bullish control zone, capitulation happens right afterwards. Hard sell, exit the bullish control zone, capitulation happens right afterwards. Hard sell, exit the bullish control zone, macro top, followed by multiple capitulations. Ooh, hopefully I muted that one in time. Little allergy spaz attack. Obviously the hurricane gale force winds stirring up my allergies again. Hopefully it doesn't get bad like last week. Ooh, got a little lightheaded off that. That's one of those good sneezes. So anyway, XLE, to me, looks like we have some more downside. We already came down to the 200 simple. We were just off of the 21 when we came down to it on the monthly. So I would look for an initial back test of that area, 66. And then if that holds, that could be our bottom if it wants to be. If not, there's a ton of confluence around this, $57, $58 roughly. We have, a series of bottoms and tops the whole way through this consolidation that's basically been going on for the better part of like 15 years. So energy for now, looking a little bit tired. Does it go back into a bull trend and continue on? Does it have a short correction before then? Probably. All right, so XLU continuing to melt down. So the utility trade is melting down right now. What does that mean? Because this is supposed to be the safety trade. This is supposed to be the risk on trade. Obviously correlated with energy in a lot of ways, but this was supposed to be the safety trade. Well, just like the energy trade, when everybody gets into the safety trade at the same time, that trade starts to blow up. And that's exactly what we're seeing happening in real time. We saw the measure move breakdown for the double top. We chewed through the resistance and we found our way to the bottom of the channel. Exactly like we discussed on the last stream. So congratulations. We did it again. We got lucky. Yay, hooray. We drew lines on a chart and then the chart went to those lines like a little bitch. Congratulations. So XLU on the daily. I mean, this is a massive channel that's been going on for, almost 13 years at this point in time, 15 years almost. So the likelihood is that no matter what happens at the bottom of this channel, maybe we poke out of it a little bit, maybe we see a capitulation out the bottom of it. It's possible. Likely though, we find support at this channel. Now the times when we do break through the channel, this was obviously the Rona situation. So if World War III breaks out, officially, maybe we see a capitulation like this, that Black Swan event. And maybe we see the measure move breakdown from this channel. And, then we just have a reason to talk about it. Oh, it's because of the World War. It has nothing to do with the fact that we've been in this channel forever. And as soon as we broke out of it, we, hit the measure move. And I'm not even saying that's going to happen. I'm saying, honestly, historically, typically, statistically speaking, you know, this should be at least a short-term bottom right here. You know, we see a little bit of confluence, bunch of red histograms, so obviously no signs of life as of now. We're in the bearish control zone, so obviously bears in control as of now. So, you know, do we just jump right in and try to pick the bottom on this at the channel? Or do we wait and see what happens? I mean, obviously that's up to you, but hard sell on the monthly after putting in massive monthly bearish divergence. Looks to me like there's potential. This is getting ready to break down. And again, depending on how we look at this, you know, if we essentially look at the measure move of the channel we've been in for, you know, the decade, breakdown would basically take us to around the 200 exponential and simple. So did it want to get there here on the monthly and it just got bought up a little too soon? Probably. It looks like the algos were really trying to take it down here to that level, and we found support slightly before it, a little front run. It's not crazy to think. I mean, we operated in a channel from 2002 bottom up until the top of 2007. Very clear, strong, trending channel. And then when we broke down, I mean, we saw a legitimate capitulation move. And I know I spend a lot of time talking about the same thing over and over again. And you're like, oh, we get it. Bloody waterfalls and capitulation. Hasn't happened yet. Well, hasn't it though? Hasn't it? Isn't a lot of stuff down 20 to 90%? And didn't we predict it ahead of time? So I would say we've already nailed capitulation. We're just waiting for the next leg of capitulation. I mean, a lot of these tech stocks, I was calling for Cathie Wood's meltdown of her fund. I said between 75 and 90%. And I called it, I mean, almost at the exact top. I even made a song about it, making fun of her. And now look, everybody's making fun of her. It's not even fun to make fun of Cathie Wood and Michael Saylor anymore because they're just such easy pickings. They're both complete failures. So it's not even fun anymore. Anyone can poke fun at them. Because you're like, oh, you did a bad job. Before it was like, oh, this is like the you know, opposite everybody else. Everybody's worshiping these people like golden deities, and, you know, we're exposing them for being trash fraud losers. And now here we are. Everybody's like, oh, look at those trash fraud losers. It's not even fun anymore. It's not even fun. So when's the next leg of capitulation going to happen? What's it going to look like? Well, I mean, this trend up here was a pretty big trend, and then we nailed the 618 pretty perfectly. You could argue the 0.5 would have been a good buying opportunity. Maybe you couldn't catch these wicks right here. So, you know, what is the situation here? Well, I mean, depending on how this plays out, obviously we don't know. We were going from high to low right here initially. But I mean, what if we just borrow this fib right here? You know, basically go from the low to the high right there. You know, we already came down to the 236. Next target's the 382, the 0.5. Do we come all the way to the 618 like we did the last time we broke the channel, $54? Do we come lower to the 200 exponential and simple? I mean, again, I don't know. I'm not sure, but, you know, we're at some support right now, which is good. But again, we're starting to see around the halfway point of the year, the finish of the first half. You know, we talked about obviously how everything was right around support on our weeklies. Everything was at 200s. We were at key fib levels. We were back testing, you know, the pre-Rona dump highs. There was a lot of confluence there. And that led us to believe that we were likely to get a bounce, which we did. We got that bounce. We took advantage of it. It was beautiful. The problem is we're starting to see signs of that again. Or not necessarily a problem, but, you know, going into Q4 now, we had basically a quarter push. It was weird. You know, the half was essentially the bottom. We had a nice push up over, you know, a month or so, and then melted back down completely. And now we're seeing signs again. The market's saying, hey, there's a lot of support around the areas we're at. So maybe we're going to get another bounce like that. Or maybe we're just going to blow right through it. We don't know, but it's worth paying attention to. XLP, you know, again, putting in lower lows. Looking pretty rough, confirming into the bear market on the daily for the first time. When we flip over here to the monthly, we see, you know, we haven't quite crossed the 821 to the downside yet. But I mean, if every chart has this just ridiculous trend to the upside, way away from, you know, fair value on our longer time frames, eventually something breaks and we come back down and we revert to that mean. You know, the same way you talk about it in a bear market or a flip. You know, we do it in a bull market, etc. Just seems more and more likely as these charts continue to develop. XTN transportation, again, same thing. Just, I mean, just looks ready. Everything looks ready for just that next big leg down. Now, does it happen right away or do we get a bounce first? I'm not so sure about that. We'll have to wait and see. But, I mean, at this point in time, it's hard to deny what we see taking place in real time right now. There's a lot of support for transportation here. This speaks volumes about the actual economy. And the main area we're going to watch for another leg down is about 55 bucks. So another 15% downside on transportation. You know, what's that going to look like for the real economy? Well, we already know. FedEx looks like went to 0. So I guess they're out of business now. All right, so let's just run through here, and then we'll jump into our cryptos and look at some commodities as well. So DXY, obviously we saw, you know, 2 days of weakness, strong red selling, Stoch's rolling over, knife topping out, multiple red histograms. We still have momentum in our favor. You know, still have obviously the 821 bull cross in our favor on the daily, but it's definitely worth noting here. Now, as we do go into this fourth quarter, you know, it's worth paying attention. Hey, could we see a DXY top, a macro top, or could we see a short-term top that lasts for a couple months? Definitely could, and it is definitely worth paying attention to. We'll see how the fundamentals line up. You know, I'm sure right now people are calling, oh, the Fed's about to pivot because, you know, other central banks are pivoting. So, you know, get ready, get ready. Here it is. Buy the dip. This is the bottom. I'm sure people are saying all that stuff. Don't believe them. They're brain dead retards. They've been calling the bottom the whole way. So am I going to call a top on the dollar right now after being, you know, one of a handful of dollar bulls in all of existence? No, of course not. Of course not. Short term, it does look like it could cool down a little bit. But when we look at this on the monthly, I mean, it looks like a raging party is taking place right now. So everything in the dollar's favor, everything in DXY's favor. You know, and the recent jump in like the pound and stuff like that. I mean, honestly, if you really think through it and you do the math and everything, I mean, we know that that was really just like the equivalent of an oversold bounce or a dead cat bounce before we go lower. What the UK did is terrible for the value of their currency. They're like, oh, we're doing quantitative tightening so the pound gets a little bit stronger. And then they're like, oh, and we're doing QE at the same time. And as the pound's like melting down, and then the pound has a bounce. So they're like, oh, they pivoted. That's good. I don't think so. You know, UK market's still looking pretty rough. The pound is looking like a dead cat bounce to me before it goes lower. There's nothing about stopping quantitative tightening that should cause your currency to strengthen. Now, it may be like, oh, okay, that's fine. Now we feel more safe. The UK cares. They're bailing us out. The government's good. Whatever. But, I mean, the truth is, okay, so even if they are pivoting, so now you're just going to have out of control inflation? Or now the pivot happened and now inflation is going to be transitory? I don't know. It doesn't make any sense to me. But the markets aren't always rational. Sometimes, you know, they're reacting off of key support levels or counter trend moves, etc. And I think that's really what's happening right now in the British pound. So Apple. So I took some profits on the Apple trade right here. We've been talking about this for quite some time. Obviously, we nailed the top perfectly. And it has done nothing but meltdown since then. We did hit our first target here perfectly. So went ahead and closed part of the position. Nice little move there on Apple. Little over 17%. So congratulations on anybody who took the free 20% from Apple's recent meltdown. You have to have some actual balls and know how to do technical analysis and really stick to your guns to short the strongest stock in the stock market. Basically like a couple dollars off of all-time highs. So congratulations on anybody with some cojones that took part in that one. We do still have a portion of the trade open here with a potential to essentially double down. It would be a 32% total move from our entry to now. I do expect at least some kind of dead cat bounce. We are still putting in a higher low for now. So still looks okay. I would expect some kind of bounce here, but we are expecting further downside to the 382 and our macro target around 114. For that 30-something% move. But yeah, again, congratulations to anybody that took part in the old Apple short. And you know, your balls grow one size today because we hit our target. So congratulations on the cojones. Congratulations. So Tesla is next. So Tesla back testing 200s a couple times here, breaking down from key levels. putting in a new low and then back testing the breakdown level. So again, this looks very similar to like what we saw, that double top, that M shape. And once we break through the neckline, we typically get continuation. Should take us down to around the lows, somewhere around like 233 to essentially threaten these lows. And then we'll see what happens from there. There's still a pretty decent cluster of support above 183 or around 185 roughly. So I do expect Tesla to hold up when we get down to that level. Could still be a little time though. That is also our blue macro 236. And then we have our green 236 here as well. We're not sure, obviously, if people are going to be using this blue macro. I suspect they are. We know for sure, obviously, they're already using the green one as we bounce perfectly off the 236. So consistently lower highs and lower lows. Seems like we're coming down here to backtest the 236. Measure move will fall slightly short of that. So between 213 and 223, I would expect some kind of temporary bullish price action. But you guys know my target's still down here at about 180 short term. And then we can talk more from there. We know we looked at these on our Wednesday stream on the longer time frame, so we know what they're holding up and which are not. Apple and Tesla are holding up. Everything else looks like shit. So Microsoft on the daily here at the lows, looking obviously terrible on longer time frames. So again, we broke down from key levels. So the real threat right now is to the downside. We're putting in lower highs and lower lows. But realistically, there's always a threat when you take out a low and then you consolidate slightly below the previous low that you're actually finding support here, and then you're going to get a spring and jump back up. Is it going to be a bear market rally? Is it just a reaction, dead cat bounce? Or is it an actual reversal of the trend? You don't know that. We don't even know if it's going to happen. But the truth is, for Microsoft, we've got some key levels to watch. This 382 is very important, but the 0.5 is really what we're paying attention to. There's decent amount of like stair step support kind of through this level, but I think realistically that 216 is really what we got to watch for now. Yeah, we're not going to mess with all these other time frames. Google putting in consistently new lower lows. We talked about the potential to come down here and fill this gap. We did that. So we filled the gap from 2021. Again, Google has marched up pretty consistently through this whole time. So it does still have a decent amount to fall if it wants to, if it wants to fall. So 0.5, next target, $87. Seems likely, quite a bit of confluence around that level. And, that would just be the bottom falling out from the 382. Still, though, this initial leg for the flagpole and then another leg, typically what you see for like an A, B, C correction pattern, would take us substantially lower than that 87 level. Probably closer to the 618, around like 76 or something like that. Taking a look at Nvidia next. Again, continuing to melt down. Semiconductors in very, very bad shape. We see obviously there is a little bit of a floor right here, some previous support. But if we do lose that 115 level, there's not a lot holding us up from like $72. And then again, if we turn on that macro fib and we look at everything, we basically lost that ascending support line. Beautiful little scalp move right here. And now we're coming down to our next target for a potential buy at the 0.5. And that would just be for a scalp around $104. We're buying $100. We're expecting a bounce, lower high, something like a 20 to 35% move before we go lower. Full on counter trend scalp, just some quick, easy money. That being said, though, from that 104 level, again, we likely see continuation down to like the high 70s. But, we'll see. We'll have plenty of time to see how that develops. Similar with Meta, breaking down from key support, breaking down from key fibs, and threatening our lows. These are the COVID lows right here. Absolutely atrocious. That Meta is this bad of a stock. Doesn't surprise me, though. It's obviously a trash company. We're just a couple percentage off of the 2018 lows, too. So even if you bought the low there and then you rode it all the way up to the top, congratulations on the round trip. You got a free ride right back to where you started. Congratulations on not logging in profits. All right, so Amazon next. Still a little ways off the lows. Looking bad, but not as bad. There's nothing really good to say about this. Obviously, $100, some support. Holding up better than most. Still 15% off the lows, but likely headed there. before long. Jump in the chat here, and then we'll take a look at some crypto coins. Milligan says, hey, everyone, good to see you. CW says, good morning, everyone. Mexico raised rates to 9.25%. Euro inflation at 10% now. Yeah, it doesn't surprise me. I mean, it's just a matter of time, I think, before like the official double-digit numbers hit. But, you know, you can tell how stupid people are. Not just the ones in charge, but like the plebs too. Or should I say not just the plebs, but the ones in charge too. I'm not sure how you look at it, but obviously just 99% of people are just brain dead retards or borderline. People are like begging. Like the same people that were saying, just give everybody money, just send everybody money, like help these poor people, are now the same people that are saying, this inflation is out of control. Do something. Help all these people. Do something. Do something. And they're like begging for more handouts and more money printing without realizing that's what's causing the inflation, or without caring. And so, you know, it's just basically like the doom loop of inflation. I mean, if you're so retarded that you get inflation and then you print money to fight the inflation, I mean, you're just going to end up like Turkey right now. We're seeing it happen in real time. You want to know what happens when you do dumbass shit like Liz Truss? You want to know what happens when you act like the UK's stupid asses right now? Fucking morons in charge. You end up like Turkey. We saw it happen in real time. Anybody that's been following Turkey over the last 2 years, they got inflation. They printed more money to try to fight the inflation. Didn't realize that they're being complete retards. And now their money has hyperinflated. Borderline. They saw something like 50% inflation in the last like couple months. 50%, like month over month, over, I think it's like over 100% inflation last year or something like that. I mean, just imagine if every year everything doubled in prices, and then just thinking, oh, we'll just print more money to fix the inflation. Fucking morons. I mean, you know, I got a lot of good friends from the UK. I did my internship in the UK decades ago. You know, I got mad love for the UK. You know, even though we have kind of a shaded background, obviously, you know. But the fact of the matter is, I mean, Europe, the UK, the people in charge, I mean, you guys are getting exactly what you wish for. You wanted all this left-wing, ridiculous government. You wanted all this, like, woke energy policy. You want all this. I mean, you got it. You fucking got it. Congratulations. You got what you want. How's it working out? Because the rest of the world is looking at it and saying, that doesn't look so good. So we'll see how it all plays out. But, man, CW, honkiness, good to see you. Triple Dumps, what's up, man? How does price rally as CPE higher than expected? Is this pump and dump, you think? Price of what rally? I'm not really seeing anything rally, Triple Dumps. So let me know what you're talking about. But realistically, yeah, sure, the CPE month over month is higher, and that's obviously not good. Year over year, I think it was slightly down. And then also, you know, this is the last day of the day, the week, the month, the quarter. So there's a lot of factors that go into this. You know, we have, you know, all kinds of expirations for options. We have, you know, all the stuff I just talked about closes. So there's going to be a battle that takes place to try to secure those time frame closes, aka, you know, we talk about it all the time, paint the tape. So we talked about Bitcoin and what was taking place on Bitcoin. So we're just going to jump into the monthly. Oh, did I hit them all? My bad. Craig, man, what's up, brother? Good to see you. UK government is a total embarrassment. Yeah, man, it sucks. It really sucks, dude. I think you're from UK, Craig, man, if I'm not mistaken. It's absolutely atrocious what they're doing to the people. I saw some statistics on the recent energy, you know, basically cap that they're saying they're going to cap, I believe it was UK households at £2,500 maximum bill. So the problem is you don't have enough energy. So when things get expensive, people conserve. Well, if you take away the pricing mechanism by saying, hey, if it goes over $2,500 for your bill, you know, don't worry about it. We'll just pay the rest. So now once people are at 2,000, you know, and they still have 6 months left in the year or whatever, they're just gonna be like, oh, we're definitely gonna go over 2,500. Might as well just keep this place, you know, scorching hot in the wintertime, you know, crank up that heat. Let's go. Stop conserving energy because we're gonna max out, you know, our bill anyway. So once we get to 2,500, who cares how much more energy we burn? because I don't have to pay for it. That's what they're telling people right now. And when they did the actual breakdown on it, they're saying it's going to save like your average UK household something like £700 for the year, but it's going to save like your just regular people. And then it's going to save like the top like 10% of households, like the richest 10%, something like £7,000 for the year. So it's just more trickle down economic. Like, oh yeah, we're going to cap energy bills and save you $700, but we're going to save all the rich people $7,000. So you're like, well, proportionate to their total value, they get less. Well, it doesn't work like that. I mean, it's just total bullshit. It's very unfortunate how stupid and retarded so many people could be in charge. But it's like the end of an era, honestly. Damn Redcoats, CW says. Craigman says, it's not that you can only pay $2,500. That's supposed to be an average. It's a cap per unit of energy. Yeah, right. Yeah, that's what I mean, though. The idea that it can only go so high. Oh, wait, is that really how it is? Are you sure about that, Craig? You can only pay $2,500. It's supposed to be an average. It's a cap per unit. Okay, I might have maybe I misunderstood how that is like structured. From what I had heard, they were basically capping your energy bill at $2,500, destroying the pricing mechanism, telling us, hey, time to conserve because it's too expensive. I may be wrong about that. Regardless, anytime you put price controls on something, it's terrible. So if it's not what I just said, it's the China scenario. We talked about this months ago with China. China was having, rolling blackouts all over and nobody knew why. And they were like, oh, what's going on with China? Blackouts are happening. What's happening? It's terrible. Well, they had put price controls on coal. So if you put price controls on coal and then you tell companies that manufacture, make, process coal, whatever, hey, you're only allowed to sell your coal for $100. And they're like, yeah, but it takes us $100 to make the coal. And you're like, so what? And not only that, you're not allowed to charge people any more money, but on top of that, you're not allowed to cut production because we don't want you, screwing the people over profits. And they're like, oh, okay, yeah, we won't do that then. And then they make the exact amount of coal that they need to make. And then they sell all that coal, and then they do the bare minimum possible. When in all actuality, if you just let them raise prices so they can make profits, you don't put price caps on them, you'll get more supply. Somebody did a really good example recently, and it's very relevant right now as we're literally like going through a hurricane. They were talking about how like during a hurricane, it's illegal in the United States to basically like buy a generator from another city and then drive it to the place with the hurricane where they have no power and then sell the generators. That's illegal, because you're like taking advantage of a crisis. You're profiting off of a crisis. So that's illegal. But what are you really doing? You're destroying the pricing mechanism. Like when all the power goes out and all the generators are sold, and then there's like thousands of other people that would gladly buy a generator, but there aren't any around and the power is out. If you allow people, capitalists, to buy nearby generators and then drive them into town and then charge a premium for their work, people will get the generators they need. They will pay a little money, but the incentive is there for the, businessman to get in his car and drive those generators to a place to make a profit on them and to essentially help, but also benefit themselves. Not malicious. They're not driving there to screw people over or selling them fake generators. They're selling people a legitimate product that's in demand at a premium because it's in very high demand for a good reason. So why would you destroy the pricing mechanism? Why would you make that illegal? So then when there's a hurricane, nobody gives a shit. Nobody drives them generators. Maybe the government does it. They have like FEMA or something like that. But let's be real. For every, generator that the government delivers using like FEMA or one of their government programs, a normal person for the same amount of money could have delivered 50 generators because there's so much money gets wasted by the government anytime it does anything. So essentially, what's happening is all over the world, there's issues and we have pricing mechanisms in place or, warning signals in place to warn us when those issues. And then we're just like, oh man, the fire alarm's going off. This is terrible. The house is burning down. Like, what should we do? Should we evacuate? Should we call the fire department? And you're like, no, let's just take the batteries out of the fire detector. And you're like, oh my God, that's fucking genius. So you get up there, you unplug the smoke detector, you take the batteries out, and it stops going off. And you're like, oh, problem solved. That's what government's doing right now. That's what the world's doing right now. We're taking the fucking batteries out of the smoke detector, and then we're just going back to our business. Oh, everything's fine now. It's not going off anymore. And we're just destroying the warning signals. So then when everything goes wrong and catastrophic meltdowns happen, like England, like Japan, you're like, oh, why is this happening? Why are we having catastrophic meltdowns? Oh, that's right. So we know we're at near the peak of a cycle. Does it go on another 10 years, another 20 years, another 2 months? I don't know. I honestly don't know. Nobody knows at this point in time. Putin could hit the magic button, or one of the EU countries could, do something stupid and everybody has to jump in. We don't know what's going to happen, but obviously destroying pricing mechanisms, destroying warning signals, taking the batteries out of your smoke alarm is not a good idea. So let's look at Bitcoin and see what's happening. Triple Dump says, watch as Bitcoin pump as CPE report released this morning. Maybe exit scam. Triple Dump says, your stream keeps me in check of FOMO. Thanks. Yeah, for sure, man. Once you're educated, FOMO becomes less of a risk. Because the idea with FOMO usually is, oh, if I don't buy in now, I'm going to miss out. And usually that means you're already too late because the move already happened. Or it's in the process of happening, which means you're not going to probably get a good risk-reward ratio. And, we see what's happening in real time. We got that push up to the exact target we were talking about. Tried once again to get above the 4-hour 200 exponential and simple. And now we're getting a clear rejection. But the most important thing is here, and we talked about this move to the upside, this is happening right here in real time. This is our monthly chart. We're in the bearish control zone. We're below the zero line. All red histograms, red slope line, everything bearish. 8 and 21 bearish across the downside. This is what we're paying attention to. The one thing the bulls can do right now that's actually good is just not close a new lower low. We have 3 months in a row where we either closed or opened at that low and just kind of hung out. The last thing we want to do now is hang out at that low again and then put in a lower low. So what happens for the next 8 hours? We're going to see the Bitcoin, the daily, weekly, monthly, and then obviously the quarter all close right here. And when that closes, it needs to close above 19,924. So basically 20,000. So in my opinion, this little pushback up here, this little rally, this little bull push or whatever, that's literally the bulls' attempt. This is the pathetic attempt of the bulls. This is everything the bulls have to try to make this chart not look like total shit. This is what they did. They did all they could. They push and push, and they just tried so hard. Oh, we're so strong, bulls. We're saving Bitcoin. And what did they do? They pushed it up a couple dollars off the absolute lowest low of the entire cycle. Congratulations, bulls. You did it, guys. You did it. It's like when you're like wrestling around with your kid, and your kid weighs like 20 pounds and has zero technique, and you can just pick them up and spin them around and slam them on the ground and just ragdoll them, like the little sperm that they used to be. That's what's happening. The bears are just ragdolling the bulls right now. And then the bulls are like shooting in for a double leg, and the bulls weigh like 80 pounds and, you weigh 220, cocked Jack Diesel. That's what's happening. I don't see the bulls as any threat right now. When I look at this chart and I'm like, oh my God, I got to buy now before I miss my chance. I'm like, yeah, right. Looks like the trap door is about to come out. We talked about this monthly candle and how we were going to be 1 month away from that capitulation from 30K to 20K. And we did it. We did it in 1 month. And then we just hung out for 3 months afterwards. So are we setting up now for that another 1 month drop, that one candle? Keep in mind, there's one fucking candle. In all of Bitcoin's existence, since the beginning of time, there's one fucking candle between 14,000 and 20,000. So whoever bought in this month right here, whoever the buyers were right there, those are the only people that are holding up the price right now, or all the other dumbass retarded people that are upside down in their positions. Michael Saylor, that might want to step in and try to protect them, or Sam Bankman-Fried, etc. How long before FTX goes belly up? raising billions of dollars to acquire other trash companies right before we take another leg down. It wouldn't surprise me at all to see, if this bear market drags out like I suspect it will, it wouldn't surprise me to see, Sam Bankman-Fried shave that afro and have to go get a real job because FTX blew out. Anyway, seems very, very likely we are headed to 14,000. Very, very likely. And you're like, yeah, but what if we find support here and we do close the lower low close and then we rally all the way back to 8 and 21? Maybe. I just don't see it right now. I don't see any sign from the bulls. I take it back. When we get to the daily, I'll show you one itty bitty tiny little sign from the bulls. But weekly, we're at the lows. We closed new weekly lows. The 200 exponential is red. 200 simple is basically flat. It's about to turn red. So we need to get back above 24K just not to flip the 200 simple red. So the bears don't have to do anything. The bulls have to get above 24K. The bears don't have to do anything at all. And we see stochastics are rolling back over. Now we could bounce the bearish control zone, bounce the pink stochastic, and rally. It is definitely possible. It happens a lot. We could do that. And maybe that's a rally over the next month, couple months. I don't know. The thing is, okay, if you're a believer in the whole end of the year rally, Christmas, Santa Claus rally, statistically, it's a real thing. So if you're a believer in that, you have to understand that we can't just rally the next 3 months. It's not going to happen. So something has to happen between. Maybe we rally right off the bat at the close of the quarter. It looks terrible, but we rally as the bears can let off a little bit because they painted the tape bearish as fuck how they wanted to. That makes sense. That seems like a possibility. That's exactly what happened at the end of the half, and we were able to take advantage of that move that followed. And then we round tripped it. So maybe that's what happens again. Maybe we see a rally for, the next month or so, sell back off, round trip it again, or, something like that, and then we rally again into Christmas. Maybe we just go sideways for 2 months and then we rally into Christmas. Maybe we go down first and then we rally into Christmas. Any of those are a possibility. Maybe we don't rally for Christmas. Any of those are a possibility. Definitely 100%. But it's worth paying attention to and noting if you're a proponent of the end of year, Santa Claus Christmas rally, which I am. Statistically, just assuming that's going to happen has done you well over the last, lifetime of the stock market, etc. So, I'm not saying just blindly bet on that, but if that is your base case, if you are expecting that, if you're calling for the year-end rally, what happens before then? Because we're not just going to rally for 3 months. We're not going to rally for 3 months unless there is a legit Fed pivot or something like that. It's just not going to fucking happen. So what's going to happen first? A rally, then a sell-off, then a rally again? Nothing for 2 months, then a rally? A sell-off, then a rally? I don't know, but it's worth paying attention to the possible scenarios. So here on the daily, when we look at the Bitcoin Bitstamp chart, we did close back above the 8. That was big. We're getting up here threatening the 21. That is big as well. Obviously, we know an 821 cross is, a good sign. God, we have been making crypto our bitch, haven't we? We literally sold 25K. The absolute fucking top right here was our last sell. And then we purchased again at 19.2, and then we literally sold, or no, I'm sorry, it was 20,200, and then we literally sold into the 22,000 pump. So we literally sold the two perfect tops right here. So if ever there was a time to understand, don't buy the dips, sell the rips. Sold the rip right here beautifully. Sold the rip right here beautifully. Somebody sold the rip right here beautifully. I'm not convinced that was the top necessarily yet, but it's worth paying attention to. So now let's talk about a bull case scenario on Bitcoin, because all we do is talk about bearish the whole stream. Let's talk about a bull case scenario. There are some bullish signs from Bitcoin, okay? We have a low right here. We have a higher low on the histogram, pretty clearly. A bunch of green right here, a bunch of green right here. One is clearly higher than the other. Here we have a low, we have a lower low. So we have bullish divergence between those 2 points on our various indicators, oscillators. We have it on the stochastics as well. We have a low here, we have a low here. Obviously, lower low here, but higher low here and here. So we have bullish divergence for sure on Bitcoin, on the daily, for sure. Now the question is this going to print and then run from here, or is it going to roll back over and just invalidate? We don't know. I mean, but it looks like pretty clear bullish divergence on the daily for now. We're close to confirming the 821 cross as well. And we know typically when we've seen bullish divergence on the daily combined with, an 821 cross, we've gotten at least some kind of rally. Now, could it just rally for 2 months and only go to 22K? It definitely could. Could it go up to 28K? Could we just have one big candle and then it melts down? Could we go slowly and surely and then it melts up? Any of those things are possible. We don't know which one's going to happen, but it looks like Bitcoin is potentially setting up for like a short to midterm rally going into the fourth quarter, essentially. But for me, it's just a dead cat bounce rally, just a garbage rally. It's nothing. It's just basically the bears saying, hey, we printed the tape how we wanted for the month, for the quarter, for the week, for the day. So now we're going to let up a little bit. We don't need to create all this selling pressure because we already got our way. We printed the tape. Anybody now that looks at history will look at it and see, the bears were in control. And then they can let up. The bulls have a vested interest in defending this area. Sam Bankman-Fried, Michael Saylor, any, macro whales out there, market makers, etc. They have a vested interest, the perma bulls do, in defending this area because they're upside down on positions, or maybe they're profitable on positions, but they don't want it to go lower. If it goes lower, more crypto projects break. More crypto projects go bankrupt. More people lose their life savings. More, regulation comes because people are complaining because they got blown out, etc. So there's a vested interest. Sam Bankman-Fried even said it. He said it's in the best interest of all people that are involved in crypto for crypto not to keep melting down and imploding. And it makes perfect sense. So that's what we're seeing. We're seeing here who's defending this level. Someone is defending the lows right here, or we would have just melted down already. So the question is, can they defend it so long that it's a bottom? Or are they just, last standing? I think they're just last standing. We'll see what happens. So, but here on the 4 hour, when we look at this, obviously we have seen the 821 has crossed over a couple times on the 4 hour. That's part of why we entered into this trade before that pump. The back test of the 200 seemed just too obvious. And obviously we took profits just because every pump we've had has melted down afterwards. But now the 821 is still blue. We're moving up here. We're back testing it again. Obviously we got rejected. Indecision candle right here. So what's going to happen? Are we going to break above this 4 hour and then go into some kind of constructive rally? And what was this constructive rally right here? Oh, on the daily, that was that little rally we talked about. That little couple week, couple month rally. So are we setting up for something similar? Probably. Does it take us back to those highs at 25K? Does it take us to 28K? Do we top out at 24K? We don't know right now, obviously, but it looks like we're trying to, crypto, Bitcoin, whoever is trying to set up some kind of rally. Now, is that just because they were trying to close the monthly not to look as bearish? Or are we going to see continuation? I don't know. No one knows. But there is a case to be made that there is some potential, that soon we're going to get the 821 bull cross. And, we talked about it before. Look, you can get crushed in one of these moves right here. These little fake out moves right here. Short term, you're like, oh, I bought down here, wrote it up. Or I bought right here after the confirmed cross or whatever, and then immediately melted down. Sure, like short term, it can look like you got screwed. Because you're like, oh, I bought right here and started riding it up and it was great. And then we broke down here and closed. Lost 6%, and then the bear cross flipped back down, and we entered back into a bear trend. So now if it happens again, I'll be hesitant to trust that signal because I don't want to get faked out again, because last time I lost 6% and it was 10% of my account. So in all actuality, I lost 0.6% of my entire account with this false signal or failed rally. I mean, it doesn't sound that bad when you say I lost 0.6% of my entire account. I lost 6% on that single trade. You're like, okay, I'll probably take that trade again. And that's why having a system that you follow consistently matters. Because if you took advantage of the situation right here, and then you got out right there right before the dump, you're like, oh, that was nice. I'll do that again. And then here you get faked out, you get back 6%, and you're like, oh, I don't know. I don't trust these signals anymore. So then you skip this one, and maybe this one runs us up to 28K. This one ends up being a 40% rally, and you skipped it because you got lost 6% or 0.6% of your account, on something like this. So you have to trust the signals. You have to figure out what works for you and go with it. You know, here we got the cross up. It was a decent little push. And then here it was like a little fake out. And then here we got another push up. So is this going to be what happens? Decent little rally, you know, failed push, decent little rally, failed push, and then, you know, another decent little rally to higher highs? I don't know. I don't know what's going to happen, but I don't think right now, I wouldn't rule out 14K. Obviously, that's my target. And I wouldn't rule out 28K. Those are the two important levels I'm watching. So we're either going to go down 5,000 to 14K, in my opinion, or we're going to go up, you know, 8,000 to 28K. And you're like, well, that's easy then, right? So we just take the long because the long is more money. Well, the problem is that we're clearly in a bear trend. So probability is, you know, what, 66% that we continue to the downside, 34% that we go up. Risk reward is 2 times to the upside and, you know, 1 time to the downside. So when we figure it all out, you know, what's it really come out to? It's basically a coin toss. You know, if we have a 33% chance of success, but we get paid twice as much if we win as if we lose, that puts us at like, you know, 66% when we figure out, you know, the basis of it. And then, you know, essentially the opposite. If we have a smaller gain if it breaks bearish, but we have a higher probability that it breaks bearish, you know, again, it just kind of averages out, and then we just end up with like this coin flip scenario. So in my opinion right now, there's not a great trade setup one way or the other. The real trade setup is going to be either longing the breakout if we do start to see confirmation, or realistically, the real trade setup is going to be, you know, shorting resistance or buying support. Now, you say, well, we're at support, so I should buy support right now then. That's what you're saying. Well, the problem is that it was support, it was support, it was support, and then we had a little run. And then it was support again, and then we had a lesser of a run, and then it was support again, and now we're trying to do anything. So the more times that we see a little run and the lesser the run is, it means less people are optimistic about buying that support. Less people are optimistic about taking that trade. And the less people that are optimistic about the trade, the less the probability is for success, you know, based on some metrics. So that's how I look at crypto right now. That's what I'm seeing on Bitcoin. I would not trust any of, I mean, we've been going sideways so long. It's difficult to trust, you know, indicator oscillators depending on the time frame. And also with this monthly, quarterly close and just trying to make Bitcoin not close a new lower low seems like what the bulls are trying to do right now. Because again, anytime we close the lower low, you can't even argue that we're not, you know, just likely to go to new lows. Because you're just, if you're putting in a new low, you're likely to just keep putting in new lows until you don't. So, and you're like, well, when don't you? And you're like, exactly. Fucking exactly. When don't you put in new lower lows? Well, let's wait and find out. But until then, no reason to get bullish, in my opinion. So ETH still holding up decent. Obviously, we did get that perfect bounce off the top of the channel, as we discussed. Beautiful. It hasn't been much of a move since then. Is this just going to be a dead cat bounce and roll over? I honestly don't know. I think ETH is just waiting to do what Bitcoin does. Still very much in a bear market. Weekly chart, holding on to the 200 simple, barely, still slightly better than Bitcoin. Histograms are rolling over. Stochastics are rolling over. We're at support. I don't like to like sell into support. But the truth is, this thing's going back to $1,000 real soon if something doesn't change. Now, it could backtest all those moving averages above its head, but I would just expect a rejection. I mean, this looks pretty brutal. We're not putting in new lows. All the momentum's to the downside. You know, bear cross to the downside on the monthly. A couple bucks off the lows. I mean, we're 30% off the lows. So it's a big deal. I shouldn't downplay it. But, you know, are we one candle away from being at $1,000 again? Yeah, we really are. We really are. I mean, if this could be the month, this new month that's about to start could be the month that the Bitcoin drops to 14K, ETH drops back to 1,000 or lower. Seems likely, honestly. ETH Bitcoin ratio. So obviously we're in a descending channel, downtrending channel, and then we had an uptrending channel. We topped out right here, and it looks like we're getting ready to come down here. It looks like we're about to cross this weekly 821 bearish again for the ETH Bitcoin ratio, telling us that ETH is going to lose value compared to Bitcoin if this trend plays out, which likely it will. And then total market cap, we are just hanging out at that 200 simple for now, holding up okay for now. Looks like just a matter of time before the trap door breaks. And the truth is, you know, when we dump down on total market cap on the weekly time frame, we're looking at like $689 billion. And that was like the 2017, 2018 high. $689 billion. So that's like another like 22 $2 billion haircut. No, I'm sorry. That's another $220 billion haircut. $250 billion in market cap about to evaporate. Seems like it. It is rolling back over. Stokes are. Histograms still look okay. We're at support still for now. But it looks like it's just ready. The trap door looks like somebody's ready to just pull the string. Bitcoin dominance on the weekly, the regular chart. Again, just hanging out at the lows. Part of that to do with dollar strength. Obviously, if we take out the stable coins, we see it's well off the lows, and it is trying to flip back bullish. Failing for now, it has left the bearish control zone. We do see blue slope on the TDMACD. Green histogram slightly below it. So basically, it needs to reclaim above the slope and continue upward, and Bitcoin will look good compared to alts. It looks like that's what it wants to do, but to tell you the truth, this chart has been fairly disappointing. Now, when we take out the stable coins, though, this gives a much more bullish picture. With the stable coins, it looks like Bitcoin is just losing or just hanging out with the same dominance. Without the stable coins, Bitcoin is gaining dominance, telling us that money is flowing into stable coins, out of altcoins, and out of Bitcoin potentially. But that Bitcoin compared to the altcoins is gaining market cap. So there's people speculating on US dollars through crypto. There's people speculating on shitcoins through crypto. And then there's people speculating on Bitcoin through crypto. And right now we're seeing that more people are speculating on Bitcoin compared to shitcoins. About the same people are speculating on Bitcoin compared to shitcoins plus stablecoins. And we're seeing more people are speculating on stablecoins, which makes sense, obviously, because of the dollar strength. Now, we'll see, does that continue? Does that reverse? Whatever. This seems like a good time for a trend like that to potentially change or to see, a pivot in the market. And this is what's so important. We talk about it all the time, pivot points, but just to bring it up, this is a key opportunity for a pivot point. Now, a pivot point doesn't mean a reversal. It doesn't mean we're going down and then we pivot and we go back up. A pivot point can be a point in the market where the market decides, is it going to pivot and reverse, or is it going to pivot and continue? And you're like, well, how can you, if you're going forward and then you're like, oh, I just pivoted. And you're like, now I'm still going forward. You're like, how is that possible? Well, just think about it as like if you're in a car and you're driving straight and then you pivot. A pivot would be like a right turn. You're still driving straight, just the direction of that straight driving changes. So don't think of a pivot as a reversal. Think of a pivot as just the beginning of a potential new trend. Even if it's continuation, it's the beginning of the trend since we broke through a key support, or the beginning of a trend since we reversed off of a key support, etc. So right now we're looking at pivot points and potential of that in the market. And typically quarters are really, really good pivot points, which is why I always pay so much attention to them. So gold broke down to new lows. It's trying to have a decent close on the monthly. Again, gold is just absolutely atrocious. The weekly looks decent candle-wise, but posture-wise looks terrible. All these markets look like they're ready for continuation to the downside. And this is just a pathetic attempt to not make the monthly look terrible. At least gold has a little wick on the bottom of its monthly. Still disgusting. 5 hours to fix this. Maybe gold rallies to 1,700 again. $34 rally. It could happen. That would look much, much better. It would look like Bitcoin. You're like, oh, at least we're not putting in like clearly newer lows. This is about to be the new lowest low monthly candle on gold. Disgusting. And the bear cross, just everything looks disgusting. Silver just does whatever gold does. There's a little resistance right here. Probably just trade in this little range right here. Gold silver ratio looks like silver's going to gain a little bit of strength compared to gold, so maybe a little rally as we come down to these moving averages before likely continuation, and gold strengthens for a long time compared to silver. GDXJ reclaims support at that level now. We'll see what comes of it. Do we rally from this point? Do we get that 26% move? Tough to bet on anything gold or silver related right now. Silver Juniors had a nice rally off that point. We obviously hit our target exactly, the 618 and the ascending support line. And then we rallied up quite a bit since then. That was at like $8, so we're at 9 right now. So nice little like 12% rally-ish. GSG, still hanging out at the lows. Looks bad. Looks like it's ready to confirm into a bear market. Probably do get a leg down and then a back test and then a real leg down. FCG, nat gas is basically back testing the 200s. Seems like we're going to get continuation to the downside. There's a cluster of resistance right here. If we do get back above it, maybe we build some support. We do still have a higher low for right now. So technically, if we put in a low, then a high, then a higher low, maybe we come up here, put another higher high, and just keep ripping. Nat gas goes up. Doesn't seem likely. CCJ, Cameco. So we had basically what looked like it was going to top out right here. It did eventually roll over. Had a decent pullback to the 200s. A little dead cat bounce to the 618. So we topped out at the 786. We came down to the 0.5. We back tested the 618. Seems likely we come down to the 382 now. So Cameco, $24. Then we're at the bottom of this ascending support line. So maybe it does see a short-term bottom. I don't know. I think uranium stocks look like they're ready to just... They're holding up way too good. There's just something about this uranium space that makes me think, it's not even the uranium space. The whole market just looks like we're about to get that trap door. And I know I keep saying it, but the whole market just looks like the bottom is about to fall out of it. Everything does. It's eerily familiar, I should say. I mean, it's great. Don't get me wrong. It sucks for everybody that's like fully invested and then the floor falls out. But, that's what we do is take advantage of opportunity. Like it sucks when everybody else is losing their money and then we're buying the absolute bottoms and selling the absolute tops. It sucks for everybody else, but, it's not like we're not out here all the time trying to teach people, offering up, free or, whatever resources left and right. I mean, you guys are here learning. You deserve to do well. It's everybody else is like, I'm not going to feel bad for people that don't consciously do anything to improve their own life or investment, quote, speculations. URA, I mean, we're just off the lows right here. There's some pretty key support around $18, but, if we get down there again and it breaks, man, there's just nothing. We'll see. I think the uranium space is going to fall out of bed. There's too many people that are too heavily invested in uranium with like a 2 to 5 year time horizon when the real uranium time horizon is like 10 to 30 years, in my opinion. Quadruple U, same thing. Just hanging on, basically. UROY at the lows. Yeah, I mean, everything looks like it's ready for just one more leg down. Pot stocks, CGC, just back at that low. Fully round tripped, took profits, obviously. Now we're right back to the entry. Do we take the same trade again? Well, we could. Tilray hanging out at the lows. Not quite the new all-time low yet, but we're getting real, real close. Daddy's going to get his Tilray soon. ACB, new lows, just melting down, back testing the lows right here. Likely continues down. Man, this thing's beat up. And then the old cheese and this crazy stuff. So yeah, that's it. We got them all. We did it. We did it. We made it to the end. So we know what to look out for. We know what's about to happen on the monthly. We know what we're expecting. We know what we're watching for. We know the key levels. We're looking for potential trend reversal or continuation. Well, what is the trend? The trend is currently down on pretty much everything, up on DXY and TNX. So are we now going to suddenly see DXY and TNX top out and then everything rally? Maybe. Maybe. We know what to look out for. We know what to watch for. Obviously daily 821 bear crosses would be a good sign. Losing key levels, back testing 200s, etc. We start looking at the bull case on cryptos, risk on assets, if the opportunity presents itself. Right now, we're getting very, very close, hours away from a very, very bearish monthly and quarterly close as well. So in my opinion, we're likely going to see continuation. Now, what happens a lot of times, okay, and this is very important because this is probably what's going to happen. So if you want to know what's about to happen, right now I'll tell you. Okay, this is what's going to happen. We're going to close. It's going to look really, really bearish, okay? And then all of a sudden, all the bots, the algos, the traders, whoever, they're going to sell into the bearish close. Oh, everything looks terrible. Sell, sell, sell. And then we see an immediate like reaction over the next few days or week or whatever, selling. And then what happens? More selling. But what actually happens is then we start to rally. So we have the reaction rally, which is bearish as everything confirms bearish. And then all of a sudden we rally to the upside powerfully, another bear market rally, and just squeeze out all the late shorters. FOMO for all the people that just sold, and then all of a sudden we shoot up 3%, 5%, 10%, 20% on cryptos, 1,000% on cryptos. Who knows? They're all scams anyway, right? So after that happens, then everybody's like, oh shit, I sold the bottom. And then they buy back in, and then they just buy the top. They do the same thing again. And then actually the continuation slowly happens over the next couple weeks, months, years, whatever. But that's what I would expect to happen. A quick bunch of selling all of a sudden as everybody gets super, super bearish based on the monthly closes and just how terrible everything looks. And then a face ripper rally that takes us to another lower high, gets everybody to FOMO back in, and then we just dump on all their faces again. So that's what I'm expecting. That's what seems likely. Does it have to happen? No. Did I consult the 8-ball on this one? No. Does 8-ball even exist, or is it all made up? I guess you'll never know. But that's it. Hopefully everybody enjoyed the stream today. Everybody got some plans for this weekend. Have a good one. This hurricane hopefully doesn't cause too much devastation as it rolls through. Let me jump over in the comments here real quick, and then we'll go ahead and wrap it up there. All right, yeah, so that looks good. No new comments, no fresh comments. If you haven't smashed up the like button already, smash it up. Obviously, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. It is 12:31 p.m. Eastern Standard Time on Friday, September 30th, 2022. And obviously, as always, I am Crypto Trend Trader. Everybody have a good weekend. We'll see you guys for our Sunday evening stream, 8 p.m. till 10 p.m. Eastern Standard Time, and then Wednesday as well. If you want to join the group, message me. Yeah, that's it. Everybody have a good one. Have a great weekend. Appreciate y'all tuning in. Stay safe in these markets. Remember that quarterly close. Keep an eye on those monthly charts. Good to see you, Milligan. You too, brother. Have a good weekend. I'll be honestly just super, super happy if we just don't lose power. I'll be really happy. That's my main goal. So, but that's it. Everybody have a great night. Wrap it up there. A great day, great weekend, great month, great fourth quarter, great rest of the year. But I'll see you before then. Remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Crypto Trend Trader, and I'm out of here. Peace.